Am I really saying this? We begin with some relatively positive economic news.
You are saying it, Errol.
It's real,
yes.
folks, but how real is it? The annual rate of inflation dipped to its lowest level in months.
And you're right to put a little bit of caution on it, but consumer prices were up 7.7% in October compared to the same time last year. Still, when we were in that 8% territory, this is a big deal because this is the first time since February we're seeing that number fall below 8%. President Biden said in a statement, quote, "Today's report shows that we are making progress on bringing inflation down." He goes on to say, quote, "It will take time to get inflation back to normal levels, and we could see setbacks along the way, but we will keep at it and help families with the cost of living."
Let's bring in CBS News business analyst Jill Schlesinger, host of the Jill on Money podcast. You all need to download and check out on a regular basis. Jill, great to have you here.
Great to be with you.
So what should we make of this? The cost of living is still high for folks. They're still feeling that punch in their pocketbook. But how encouraging are these numbers for families who've been dealing with this all year and are now prepping themselves for the holiday shopping season?
You know, when you look at the economy, when you look at markets, I like to say the trend is your friend. And the trend is moving in the right direction. As you said, 7.7% annualized price increases is actually the best that we've seen since January of this year. So that's good. The core rate, it strips out food and energy down and from its previous high levels, but still up 6.3% from a year ago. Not to be buzzkill Jill, but I will be in this moment.
Reality check, Jill.
Reality check. I want to bring up two areas that are very problematic for anyone who is facing a monthly budget. The first is food costs. Food is up by 10.9% from a year ago. That is a startling number. It really is. And food is actually 14% of the consumer price index.
Right.
The second part I want to point out is shelter. Shelter costs are up by 6.9% from a year ago. And shelter actually accelerated last month, did not go down. Shelter accounts for a third of overall prices, 40% of that core index, and it is that shelter that is keeping inflation high right now.
So I'm so glad you brought this up because this is a thing that Errol and I have been talking about a lot. Shelter meaning rent, meaning purchasing a home. The cost of shelter just month over month rose 0.8%, which is the highest increase since 1990. One of the things that the Fed actually is pretty effective in doing with these inflation rate increases is making it more expensive to buy a home because mortgages are more expensive. So then the price of real estate is supposed to go down. So why are we seeing shelter increase?
So there is a lag, and the lag is twofold. One is that it takes a while for actually the rate increases to filter through the economy. You're right that the housing market is the sharp tip of where we see a slowdown. And so there is no doubt that the housing market nationally has slowed down. But make no mistake, prices went up by so much. We are still higher than we were a year ago in price levels. And during the pandemic, a lot of landlords took it on the chin. They ate a lot of those rental increases. They went crazy with rental increases coming out of the pandemic. Those rents, though, they are going to start to come down. So home price increases are going to start to decelerate. Home prices nationally are probably going to go down nominally, meaning the actual number is going to be lower than it was a year ago in the coming months. We haven't seen that broadly spread out throughout the economy. And that is one of the reasons that Jerome Powell, the Fed chair, has basically said to investors, economists, and to us, before you get so excited about when we stop these interest rate increases, you should be more concerned about where rates end. And they will still be high, and they're going to stay high for a while.
And just a few quick seconds on the jobless claims. They were down by 7,000, but still historically low. What should we read into that?
Not too much. I think that weekly jobless numbers are kind of noisy.
Okay.
I think what we know about the labor market is that it has remained stronger than many people realize. Although we hear these news bits about tech layoffs, broadly speaking, the U.S. economy has averaged 290,000 jobs a month for the last 3 months. The unemployment rate is still near these 50-year lows. And so what I think the real takeaway is the Fed looks at the jobless situation and says, we got plenty of room to keep rates high for a while. They are willing to let the unemployment rate drift up to hurt the labor market a little bit so that prices come down. Remember, You know, when you look at your own financial situation, high prices impact everyone. Job losses impact a fraction of the people in the workforce.
Interesting. Great to have you walk us through all of this. Jill Schlesinger, we'll see you again soon.
Yes, thanks.